I'm your host, Effie Pilarino, and today we are talking about a hot and sensitive topic with an expert, Dr. Eelco Fiole, who is really an expert in governance and ethics. Those are the topics, especially governance, that we want to discuss today. First of all, let me welcome you, Eelco.
Thanks, Effie.
For our audience, Dr. Eelco Fiole is founder and managing partner at Alpha Governance Partners. The focus of his work is really around governance in the investment space and the blockchain, more specifically, the tokenization space. And we want to discuss today around governance or the lack of governance, because of course, it's a huge topic right now with the collapse of Celsius, with the systemic risk that has been sort of recognized now in the system. Let's not forget that Celsius, which was the first realization of a blow up, and now they'll have to restructure. There were early signs. There was a big hack. Then there was the Luna blow up that, of course, hit them because I think from the 30 million that they have, billion that they had in assets under management, around 2% were in the Luna from the deposits that they had there. And of course, that went to zero. And then we saw how everything's interconnected in this DeFi world, because there's Ether and staked Ether and wrapped Bitcoin and so on. And of course, we'll talk about this interconnection. But let's start from what you see, Eelco, in this space as the big problem around the lack of governance.
Yes, thanks, Effie. Yeah, when I saw the events over the last week unfolding, I was at first irritated and horrified, and now, of course, deeply disappointed and hurt. Like I think many of the people watching this, enthusiast about this technology, on the one hand, the possibilities, and also invested. And so, and I found myself asking, was this really necessary, what we've seen? And my quick answer is no. Of course, many specialists in this field will have a notion of what went wrong or what need to change. But being active in the governance field for quite some time now, both from a corporate and investment perspective, as well as in blockchain for a number of years, I realized that that we also must be looking at some governance lapses. For example, if you have an algorithmic stable coin, the question then becomes, how does collateral work? And collateral is not a CeFi or a DeFi kind of concept per se. It is a concept which we know in finance for a long time. And so there's a lot of experience around collateral management. The question around liquidity, how does liquidity work? And how do you work in an environment where liquidity leaves the room quickly? What kind of emergency measures can you put in place? And it is these kind of questions which on a governance level need to be answered, i.e. governance as in the oversight over the entity or the entities or the ecosystem or the construction, how that oversight is then organized is a different topic around those kind of risks. And this supervisory kind of responsibility is not the same as the operational responsibility. So I think that we can still draw some lessons what we need to do from an oversight point of view.
Eelco, what I'm hearing from you, from what you said, is that basically we could take well-known principles of governance from the very traditional space. I would think from the derivative space, for example, or the structuring space, and really take them, and with very slight adaptations, or maybe even none, we could move them over to DeFi, tokenization, and so on.
Yeah.
Is that correct?
Yeah, that's correct. You know, if you look at the debate around governance in the blockchain and tokenization crypto world, people talk about the tokenomics, design of protocols and coins, design of DAOs, and so on. And that is all useful, by the way. We all need that, and it is highly interesting. However, at the core of governance is the fiduciary responsibility. So if we design a coin to get and ask coin holders to vote, then basically what it means is that we have coin holders that are allowed to vote or have a let's say a power to vote based on the coin holding, and the entity that issues the coin fulfills with that its fiduciary duty to the coin holders.
Mm-hmm.
Now, the fiduciary duty is basically the duty to act in the best interest of another party that has no opportunity other than to rely on those people in charge. So if I'm an investor somewhere in the DeFi universe and I invest in some underlying, and that could be, and that is a complex underlying. So in that sense, a comparison with a derivative of a structured product or a hedge fund or a product like that, securitized and so on, is very appropriate. So that means that the investors and those people that are relying on these investments or are also putting their money in, they can have no alternative. They can only rely on the developers and those operators in the DeFi space. So the first principle we need to look at with any DeFi or also CeFi operator for that matter is, how is the fiduciary duty discharged? How are the interests of those who are involved in this being represented? How are these interests being taken into account in design of DAOs, of protocols, and so on? Not just coin holders who vote, but literally the operation of an ecosystem, the operation of the individual entities in this space. So again, coming back to a stablecoin example, those people who design these stable coins, in this case based on an algorithm, how is collateral management done? And how can I say investors or holders of the stable coin look them in the eye and say, you can trust me. I have this stuff under control. I know what to do when something goes wrong. I have, legal, legal support or walls in place. I have emergency liquidity in place. I have, outflows in place that I can manage those, compartmentalize those, and so on. All of these things, which in a real life, let's say, fund investment perspective, we also know in terms of, in this case, a liquidity event. So I think the first principle we need to look into is the fiduciary duty. How is that being discharged? The second thing, which we can learn from the corporate and investment space, is the difference between oversight and operational management. So those people who are in charge in designing and operating these entities and these structures are typically not the same people or entities that do the oversight role on behalf of those stakeholders, right? And so we need to understand, how is this oversight really being done? It can also be potentially in a DAO, but that becomes complicated. Then you would have to look at the responsibility and the fiduciary, especially the fiduciary responsibility of developers that do this on other people's behalf. So the second element that we can learn from is the design of the oversight versus the operational work. Now, all of this and the influencing that goes with it needs to be part of the governance design of any entity in this space. And so if we have governance in place, then hopefully we will also have a far less systemic impact when only one player goes down. Because what we see here is it's a huge value destruction of people like you and me who are invested in this space, because 1, 2, 3 players fall over, which is crazy. Now, you may say in 2008 we've seen it in the financial crisis.
Mm-hmm.
Yes, and so we have learnings out there. We have people out there. There is experience how to mitigate risks. But I'm not certain that in the in the new space we've learned that.
Yeah, Eelco, I want to interrupt you because, I mean, I feel that what you said is, you know, we don't have the regulation in place to sort of tackle this.
Yeah.
But wouldn't the transparency that exists in the DeFi space, because it's on chain, most of it, not maybe not all, doesn't that help today or yesterday when Celsius went down, when all, you know, Babel problems, the Three Arrow Capital and so on, wouldn't we be able to know and quantify immediately what the contagion is? Because as you said, in 2008, I mean, nobody really knew. That was the big disaster. And it took them days and weeks and months. And even then, nobody had the picture.
That's right.
So don't we have that picture here?
So the short answer is no, we don't. Because the transparency that we have is the transparency that some of us have. You know, even though I'm also active in this space and also invested, I don't follow things on my screen all day. I also have other things to do. And that is with, of course, many of us the case. So we do rely on those people who actually run those entities. This transparency may be higher in theory, but in reality, I think many people, even if they had the time, are not even qualified necessarily to understand what they're looking at. So, so that is one thing. The second thing you mentioned is the regulation. Now, in my mind, if we want to grow this this virtual world, and if we want to be successful, if you want to reach adoption, we should put structures in place which are out there and we can use them in our own interest. We should not wait for a minimum level of regulation. I'm saying a minimum level because regulation is always the kind of minimum people can agree on, regulators and so on. And then you get the problem of one size fits all and so on. So regulation is coming anyway at full speed at us, but we shouldn't wait for regulation and say, we'll do stuff anyway in the absence of regulation. We should say, you know what, in order to project trust, in order to want to get adoption, in order to grow this business, we're going to put controls in place, irrespective if the regulation tells us we can or cannot do certain things, because we are responsible developers, we are responsible business people, and we want to create a flourishing DeFi or CeFi world, whatever it is that we're aiming for. So regulation, in my mind, is not a huge topic here. It's coming our way, that's clear. And then it becomes a huge topic because we need to implement structures and so on. But before that, we already need to be aware of this fiduciary duty and, you know what, limit ourselves a bit in terms of the risks that we create for others, because it is not projecting trust. Who knows how long it's going to take before we're going to see people trusting this sphere again, capital coming back into the space again, valuation levels up again, and so on. It may take 2 years. I don't know. It's a disaster what we've seen, and it's a disaster in part by our own making.
That is, I mean, I think we were all asleep, so to speak, because of all these voting, the voting power to the people, meaning, whether it's a user or an investor, depending on the blockchain initiative,
Yeah.
if you want, and having that fallacy that we understand what is going on. I mean, just the last weeks, I was talking and explaining the difference between yields that come from lending and yields that come from staking. And I realized that a lot of people hadn't realized that difference, and therefore, not understanding what kind of risks are behind these yields. Just the basic things. So as you said, we need to take that responsibility to show to the space and to the users that we have thought through these things, and it's not just a technology that has the potential, but the way we use it is a fair, ethical, in the sense of the fiduciary duty that you mentioned. I really liked the distinction that you made between the operational governance and the oversight governance. How well is that done in the traditional world, and is it completely lacking in the blockchain world?
It's these are 2-3 questions in one. And to start off with the first part is that within blockchain, if we talk about governance, we talk about, as I said, voting around by coin holders, DAO design, and so on. And that is incomplete, right? We need also this governance notion around the entities and within an ecosystem in discharging the fiduciary duty, especially when it deals with other people's money or other people's investments. In the traditional world, governance is very well defined in the traditional investment space. If you look at corporate governance of investee companies or corporate governance of investment companies, there are listing rules for exchanges, so you can't list your stock at an exchange if you don't comply with the listing rules. Therefore, these companies have armies of compliance people, and so on and so forth. Also, in the investment fund space, governance is very well defined. How boards are being put together, how fiduciary duty works. In common law systems, this is very well defined. In civil law systems, it is a bit differently coded into law, but it's also there. So that is very well defined. Are there flaws? Of course. Are there, does stuff go wrong? Yeah, stuff goes wrong. We see this all the time. But in this growing industry as blockchain, especially applied to finance, we need to sort of integrate governance notions from the design phase on. And that's also what I do with my own mandates. Even though there is no regulation around, oftentimes we still talk about AML, KYC, oversight, risk management, and so on. And that is because I have that experience myself. And it is typically not on the radar for enthusiast developers who realize that they can do brilliant things based on technology very efficiently, much more efficiently than what traditional structures do nowadays. You still need to make certain that people that entrust you with these values to transact with, that they can really trust you with the infrastructure that you build. And that is not only an operational matter, that is also an oversight matter.
And Eelco, should we be thinking similarly when we think about these issues at the layer one, the protocol layer, like Ethereum and so on, and also at the dApp layer? And I'm really thinking of Ethereum, which is has been such a booming DApp ecosystem, and you have, you know, some CryptoKitty DApp clogging the system, or, you know, other similar situations.
Yeah.
How should we start thinking?
Yeah, that's a good question, and the short answer is yes. Everybody needs to think about this. So if you're a layer one developer, you need to think about this. And I'm certain that if you talk about Ethereum, that they are thinking about this. If Alec regularly publishes articles on his thoughts on governance, including for those stakeholders who are not coin holders, for example, regulators. They don't hold coins. They still have an interest at stake on behalf of society. And also DApp developers, everybody who's a part of an ecosystem where value gets transferred, especially other people's value, that is where the fiduciary duty arises. So for those people who have an influence in the actual design, but also policies around transferring these values, they need to think about, well, how am I doing justice to the various stakeholders that I have out there, and how can I protect them if I invite them to transact through my not only layer one protocol, but also then on the other side through my DApp. This is very similar to what you get in an investment fund setting, for example, where you have a number of players, not an integrated company, that all are involved in supporting the investment of a of a sum of money for an investor in a certain investee company or investee project. There also you have a number of outsourced relations, let's say, similar to what we see in blockchain ecosystems that know governance, and that governance there is being designed and maintained by a legal framework, in a way that we don't have yet in the blockchain space. And so we don't have this legal framework. As a result, we have to rely on people's own good intentions. And if something then goes wrong out of ignorance or arrogance or something else, then the investors get to pay for it. So, and that's what we see right now, a massive destruction of values. We've all lost so much with this hugely and super quick systemic risk event in this particular space, because even the lessons from the traditional world have not been captured. And, you know, if I think about entrepreneurial activities in this space, then this needs to include governance considerations, full stop. We cannot just say we put a number of bright developers together and they build something to execute on. That is great in itself, but it is not complete. We will need to understand how we govern for others, on behalf of others.
And all this is happening right before everybody was psyched about the coming institutional adoption, be it for crypto as in the traditional sense, or DeFi. As you said, it really breaks our heart to see this type of systemic crisis happening.
You know, it's the investors which are hurt. I hear from a number of projects which have difficulty now in capital raising. Their token value has dropped as well as a result. So capital raising is hugely impacted. Trust of investors who are typically outside of this space, who are interested, they're withdrawing. You know, people that have been working for years on developing, they are hurt, and so on and so forth. It is in that sense, the fiduciary duty is not only towards investors, but also towards the industry. And it is a bloodbath all around as a result. It's it's a real pity. And if I think about things like liquidity risk or collateral problems, then I think, okay, is that something that we didn't know about? Of course not. I mean, we got meters, even behind me, meters of books written about this stuff. And maybe we should have taken a few lessons into account in designing these things as we set up our hopefully successful DeFi structures.
Let's hope, Eelco, that like with everything through these failures, the lesson is learned, and G for governance of the sort that you're highlighting here, not the operational, but the oversight, the fiduciary, and so on, becomes top of mind in this industry, in an effort to show that they do understand the importance of this.
Yeah, and it is not rocket science, right? I mean, there's material at hand to design these things, and to get this reflection within your entities. But it is outside of typical of the scope of operational people, and therefore, yeah, it's not on the radar, but it's all there. And those who are serious about this, they know this, they take this in. But unfortunately, we're still early stage in DeFi, and so accidents happen, and this one is of the dinosaur
proportion. Yeah, at a time that is pretty sensitive. It is not. The adoption is much higher than when Mount Gox happened.
Yeah.
And the damage is big, and also add onto that the rest of the macroeconomic environment, which really is not helping us at all. And on that note, Eelco, thank you so much for sharing your thoughts. And again, I will be sharing where people can reach out to you to discuss deeper about your governance experience in this space.
All right, Defi, thanks so much.